welcome to Killick & Co.'s podcast for the 4th of November. A look back at last week showed some interest in the US, where we had data coming out from unemployment numbers and also commentary from the Fed. And the interesting point was that they see very little damage to the economy over the debt ceiling negotiations. Clearly there were some impacts on some spending, but overall I think the market felt that they may have just indicated some softness during that period, and that they would keep the foot down hard on the accelerator of QE for a longer period of time. But that wasn't the case, and really the outcome of the meeting is indicative of possibly a move towards tapering of QE more towards the very early part of next year, maybe even as early as January. Now, what was quite interesting, for me at least, was that the last time an indication of tapering took place, we know that markets did take quite a fall. This was in May of 2013, but this time around it seems like the markets took much of this in its stride. So overall, maybe a more heartening signal that the markets are maturing towards this outcome anyway. To turn into this week, there's a lot to talk about this week. A quick look at the diary of corporate events this week is indicative of the level of detail that we're expecting. We cover this from Tuesday. Just a quick indication on Monday morning is that we've had a couple of profit warnings. First of all, from Ryanair, which is impacting on many of the airline stocks this morning. EasyJet are down 3%, Ryanair down 7%. Even international airlines have come off a little bit at the moment. Previously, I've seen Ryanair warn, and they do have most of their sort of travel arrangements are not competitive to EasyJet's. They travel to different airports, slightly have a different demographic. So indeed, the impact may be more company specific than industry specific at the moment, but there has been a hit there. And we've also had some lowered guidance from Weir Group, the oil and mining services group, which has taken about 7% off the share price. But other than that, the stock market is heading higher on Monday. And looking at some of these numbers, we've got some big companies that are reporting this week. In fact, tomorrow, Imperial Tobacco, Marks and Spencer, Intercontinental Hotels are particular features for us, and we'll be talking a little bit later about some of the charts of companies that will be of interest for Killick. In terms of the macro data, we also have interesting commentary from the ECB and the Bank of England, where they'll be discussing interest rates, and that comes up on Thursday. And it really start off to take a look at the charts. So far, the FTSE 100, as you can see, very much drawn towards the top end of that trading range. Last peaked around this level back in May, as I've mentioned. This was just prior to that tapering talk, which really took 10% off the market very, very quickly. But as you can see, that recovery has now taken it back up to the full end of the range, even with tapering talk beginning to show itself. The S&P has broken through those May highs and taken it to sort of new high levels during the course of last week. S&P is less burdened by some of the mining stocks, but as a result of that, it means that it has moved ahead. But I would point out that the mining stocks do feel like the one sector that feels to have some momentum behind it at the moment, and could give the FTSE a little bit of a sort of boost towards the year end. One chart that sort of featured last week for many commentators was the inflation data that was coming out from the Eurozone. And we can see here that over the course of 2013, we really do now have quite a marked lowering in the inflation in the Eurozone at the moment, as austerity is beginning to eat quite hard into the inflation data. This is going to be most pertinent, I think, for the ECB decision this week on interest rates and other methods to try and stimulate some more activity in Europe at the moment. The one thing that central bankers hate more than most things is moving into a deflationary spiral, as Japan has sort of witnessed over the course of the last 10 to 20 years. So that's one chart that I think is going to become higher up the priority for watching over the course of the next few months. What's that doing for the euro? Well, you can see the euro did actually take quite a hit on the back of that inflation data at the moment. The euro is starting to look at more stimulative measures, which will be currency weakening for the euro to try and sort of get some inflation back into the system. So quite a marked decline there for the euro last week. Just turning to some of the companies that reported, we were particularly impressed by the numbers out of BP. Yes, they have the cloud overhanging still of the court case, but some very good numbers on the underlying operations of BP, and thoughts on the dividend increases that came in better than expected drove quite a strong re-rating of BP's share price, and really from sort of trending at their sort of low range since the beginning of the year, the shares have broken through to year highs. It's been a long time since we've seen a £5 share price on BP, but it's very, very close to moving in that direction at the moment. So some real momentum behind that stock, finally. We also had numbers out from Smith & Nephew. Smith & Nephew features on our healthier living theme note, and pleasingly to see that that share price has started to break through the £8 level and taken it to upwards into new highs. This company 2 or 3 years back had a bid approach and was last seen at £8 around that sort of bid talks that actually came to nothing, but it's now getting there on its more of its own volition in a sense, without bid rumours. So healthy fundamentals driving Smith & Nephew at the moment. In terms of stocks this week to watch, Amadeus is one that is featuring on our airline travel theme note. This is the company that represents over 20% of the bookings that take place online for world travel. So as world travel grows, then Amadeus is well positioned for that growth. Their numbers out this week. We will be watching those numbers very, very carefully. Amazon last week, again, which is in our e-commerce note, had quite a strong bounce. Shares up to 359. So there's no stopping some of these technology plays at the moment as they start to get the operational gearing out of the landscape or the landmass that they've accumulated over the course of the last few years. So strong results from Amazon. And finally, from our healthier living note, we did mention Whole Foods market. Whole Foods operates very much at the sort of top end of the retail market for healthier living, natural ingredients and organic grown foods. They're populated throughout the US and increasingly here in the UK at the moment, a company in the US. And for any further information on this particular stock, and in particular ahead of their results this week, do tune into our sort of thematic note on healthier living.